Good morning, viewers. It's Tuesday morning, May 13, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Please mention your email in the comment section so that we can forward you the daily market wrap in your inbox at exactly 7 a.m. Eastern Time each weekday. Wall Street notched a banner day as US stocks surged to close near the highs of the session on Monday after the US and China agreed to slash punishingly high tariffs on each other's goods. A US China deal to temporarily slash reciprocal tariffs offered relief to markets worried about a trade war. The Dow Jones Industrial Average gained 2.8% or more than 1,100 points for its highest close since March 26. The S&P 500 soared nearly 3.3% to its highest level since March 3. And the tech-heavy Nasdaq Composite led gains rocketing up 4.3% for its highest finish since February 28. On Monday, the S&P 500, Nasdaq, and the Dow all boasted their highest and biggest single-day percentage gains since April 9, and the S&P broke above its 200-day moving average for the first time since late March. Meanwhile, the Nasdaq Composite, climbing 4.3%, entered a new bull market by closing more than 20% above its April low. Wall Street's fear gauge, the CBOE Volatility Index, which had hit a peak of 60 in April due to tariff fears, traded below 20 on Monday for the first time since late March. The market perceives any progress as positive. And so the decision by the world's two largest economies represents a major thaw in trade relations that resets the tone between the countries from outright conflict to constructive engagement. After 2 days of weekend talks in Geneva, President Trump's reciprocal tariff on China will fall to 10% from 125%. A separate 20% tariff the president imposed over what he describes as China's role in the fentanyl trade will remain. Beijing will cut its retaliatory levies on US goods to 10% from 125. The US said reductions will last 90 days while talks continue. Treasury Secretary Scott Bessent said meetings over a fuller deal would likely start in the next few weeks, but it would be impossible for reciprocal tariffs on China to fall below 10%. President Trump said the trade talks achieved a total reset with China, calling it a very good deal, and added that he might speak to Chinese leader Xi Jinping at the end of the week. The agreement lowered tariff levels far more than Wall Street expected, and for the moment, it is a best case scenario for investors. Of the 11 S&P 500 subsectors, defensive utilities was a sole loser by the end of the session, falling 0.68%, while the strongest sectors were heavyweight consumer discretionary, which added 5.66%, and technology, which climbed 4.66%. In technology, Apple rallied 6.3% after a report that it was considering raising the prices of its fall iPhone lineup. Investors jumped into shares of big tech mega caps, bruised by trade war worries. AI chip leader Nvidia popped more than 5%, with Amazon and Tesla also surging. Shares in energy soared 26.2% and led S&P 500 advances after the utility said it would acquire power generation assets from energy infrastructure investment firm LS Power in a deal valued at $12 billion. The earnings season is winding down with more than 90% of the S&P 500 companies having reported so far. Numbers from retail giant Walmart are due later this week. Meanwhile, President Trump on Monday signed an executive order aimed at lowering prices on drugs sold in the US after promising on social media to bring in cuts of at least 59%. The plans could end up raising prices overseas, boosting revenue for pharma companies. On the finance front, Treasury said the US collected $7.6 billion more in customs duty in April than in the previous month as revenue from tariffs accelerated sharply. The dollar and the US Treasury yields climbed as oil powered higher to lead a rally in commodities. In the other commodity, safe haven gold fell 2.6%. Traders will get their first sense of the initial inflationary effects of Trump's tariffs, the release of key inflation data later this week. April's Consumer Price Index CPI report is due Tuesday, followed by retail sales and the Producer Price Index PPI on Thursday. Several Federal Reserve officials, including Chair Jerome Powell, are slated to make public remarks over the week. My take: pause button on the markets? If I had hit the pause button on Liberation Day, April 2, gone off into a snooze, and woke up in a Rip Van Winkle style on May 8 a month later, I would not have missed much at all. Just look at the graph below and you'll know what I mean. The percentage price changes in US stocks versus gold prices tell you the story. Gold and US stocks prices merged into one as if to tell things are still uncertain. So now the question begets is whether will it be better to be invested in riskier assets or should one still opt for the safe haven? Time will certainly answer it for us. But while stocks are looking rosier now, one social media post by our finger and thumb happy president and the party will start to look all right. In the meantime, happy investing. Stay inspired. I will see you again tomorrow morning. In the meantime, please do share, like this video as much as possible. It is all about money.